Fed chair warns of uncertain and adverse consequences of U.S. debt default. We'd be in uncharted territory. Look at Jerome Powell looking like a straight clown. Federal Reserve Jerome Powell has warned of the potential consequences of a U.S. debt default. We'd be in uncharted territory, and the consequence of the U.S. economy could be highly uncertain and adverse. No one should assume that the Fed can protect the economy from the potential short and long-term effects of a failure to pay our bills on time. Powell's warning came after the Federal Reserve increased its key interest rates by 25 basis points this week. Many people have warned of the dire consequences of a U.S. debt default. Treasury Secretary Janet Yellen, for example, cautioned that it would produce an economic and financial catastrophe. The president of the European Central Bank, ECB, Christine Lagarde, said it would be a major disaster if the U.S. were to default on its debt obligations. Yellen revealed this week that the Treasury Department will not be able to pay all of the government's debt obligations as early as June 1st if Congress doesn't raise or suspend the debt limit before that time. Okay, guys, so to be quite frank, don't call me Frank. The US does this every single year, man. Every single year, we know we have a debt problem. But every single year, it comes down to like the last minute to extend the debt ceiling. Why? One reason why is to use fear and panic to motivate people who wouldn't usually say yes to increasing the debt ceiling because no one thinks it's good, but to use that fear and use all this rhetoric to scare people into increasing it. Because why? Who does raising the debt ceiling ultimately benefit? Central banks. Who's issuing the debt? Central banks. They get paid more money by issuing debt because there's interest on the debt. And notice we got Christine Lagarde, very associated with the banking cartel, Jerome Powell, Janet Yellen, all saying crazy stuff, scaring people to motivate them to extend it.